Hi, many people think the hardest part of trading is the strategy or indicators. In reality, the hardest part is knowing exactly where to enter a trade. You can know dozens of strategies, but if you enter the market randomly, the result will be zero. Your strategy won't work if you don't define the entry point correctly. In this video, I'll show a simple and effective logic for finding entry points that I personally use. No magic, no complicated terms, everything is clear and shown with examples. I remind you that I have a Telegram channel. The link is in the pinned comment. Join it. There's a lot of useful trading information and breakdowns of my strategies. One important thing right away. There are no perfect entry points and no 100% signals. Today I'll show three types of entry points: trend entries, entries from levels, and counter trend entries. But we will get back to that later. The safest option is trading with the trend. For example, here we have a currency pair. We analyze it across different frames. We open the 1 hour time frame. There is a downtrend, a clear drop, then a breakout, and price reaches the previous level. A reversal is possible. We don't rush to enter by trend yet. We switch to the 1 minute time frame. What do we see? After the drop, there is a small reversal. Price hasn't reached the previous base level we marked, so we can trade with the trend and enter a sell. I wait for a small pullback on the candle and enter a sell. We identified a local move downward and entered. Simple. Trading with the trend is one strategy, but it's important to understand whether we should trade with the trend or counter trend. For counter trend strategies, we use indicators. I'll show that later. Trend entries are safer because the direction is clear. We wait for a pullback like here and then enter. On the 1 minute chart, we saw price moving towards the marked level, waited for a pullback and entered. Everything is quite simple. There's a small breakout now, but I still think price will go down, so we stay calm. In a clear uptrend, price makes higher highs and higher lows. I don't enter at the top or in the middle. I only look for entries on pullbacks. Here there was a pullback and I entered, for example, on a sell. As you can see the result. Great. We entered after a pullback. Price showed strength again. This is not guessing, it's trading by scenario. We waited for a pullback and entered with the trend. Now let's move to another currency pair. We always check the payout. Here we have a clear uptrend, and now we can try a counter trend entry. As I said, for a counter trend strategy, we need a filter to confirm that our decision makes sense. In this case, we use the RSI indicator, which shows market overheating. It's approaching the 70 level. The trend is bullish, but buyers are getting tired. When it gets close or slightly crosses that level, I'll wait a bit and then enter a counter trend trade. Not yet, we wait. A bullish candle is forming now. If we see a confident move downwards, I'll enter a sell. For now, price is fluctuating, so I wait until the candle grows a bit more upward and then I'll enter. If we get a peak, I'll enter. Yeah. Now we see a confident move down. I'll enter now because the downward move is strong enough. Being very close to the 70 level shows overheating, so we entered counter trend. Price is fighting now. You can see the line moving, but I think price can move toward the middle around 50. So the decision is correct. Now we just observe. It's simple. The counter trend strategy is confirmed by the indicator, but we don't trade based only on it. If we see a crossing or level close to 70, we don't immediately place a sell. We must understand what's happening on the chart, define the trend and only then enter. You can't trade based on just one indicator. The indicator helps, but it works together with technical analysis. Remember this. To trade consistently, you must use two tools together. 3 seconds left and we close in profit. Great. This is an example of a counter trend strategy. We identified an uptrend, so RSI close 70, entered counter trend and made profit. Excellent. So I've shown you two examples. The first was trend trading. We saw a clear downtrend on the 1-minute chart and entered strictly with the trend, making profit. The second example was the opposite. We didn't enter with the trend. We identified the uptrend, turned on our RSI filter, and it showed that a counter trend trade was possible. As you can see, using everything together works well and brings solid profit. Next, I want to talk about entries from levels, support and resistance. One important thing to understand: a level is not a line, it's a zone. Look here, price has already come to this area several times and then reversed. Now price may reach this area. Again, I'll mark it so it's clear. It can reach the zone and reverse again, or it could reverse sharply right now and form a new level. What do I see here? Price is slowly moving toward this level. I can enter a buy when this candle grows a bit more. Price will get close, maybe touch it with a wick, and then I can enter a buy. I'll slightly increase the amount while we wait. Price is moving sideways now, but a candle is forming. There may be a small pullback down, and then I'll enter a buy. When price approaches a level and reversal is likely based on past behavior, that's our logic. I enter. Now I wait for the reversal. Even if the candle reaches this line, I'm confident the reversal will happen around that moment, and it's already starting. I don't enter immediately when price starts fluctuating. I wait for slowing candles, long wicks, small bodies, and only then open a trade. Like here, a small candle formed near the level and I entered. If level is broken confidently with a strong breakout of the previous level I marked, I don't enter. Remember this rule. Now price reached the level and broke it. I think reversal is possible. Even if we lose this trade, we will enter with martingale and recover the loss. Yes, there was a strong breakout, that's fine. This is the moment when we can catch the reversal. I place $450 using martingale, waited for the breakout, and now we see a reversal forming. I'll go for a buy. Price reached the level, even broke it, and now two bullish candles have formed. I continue trading with a trend. You see, we waited for the breakout and then the reversal. We used martingale to recover the previous trade. We observed the situation. There's a confident upward move now. Some fluctuation is there, but two strong bullish candles in a row. I think price will continue moving in this direction. I even think during this session it can reach these levels. There's some back and forth movement, but candles leave long wicks. Price is rising. What did we do here? We traded from the level. Price broke the level. We waited for two bullish candles and only then entered. and you see the profit. Great. As you can see, trading from levels works too. Now I want to point out where you should not enter trades. There is no entry point if the market is flat, candles are chaotic, and the chart is unclear. Always study the chart before entering. Don't rush to make money. Rushing will only drain your deposit. Also, don't trade when there are no clear levels and no clear market direction. If you are unsure, that's already the answer. The best trade is the one you didn't take. Remember that. Before every trade, I ask myself 3 questions. Is there direction? Is there a level or clear entry logic? Do I understand why I'm entering here? If at least one answer is no, I don't enter. In conclusion, entry points are not magic and not secret indicators. They are about thinking and discipline. If you want to see these breakdowns regularly, in my Telegram I show trades, logic and mistakes in real time. The link is in the pinned comment. Thank you for watching this video. I hope you see you in my next videos. Good trading to everyone. Bye!